What's up YouTube? Silver Dragons here, and in this video we're going to talk about gold and silver prices. They are currently on the rise, but also I want to cover why gold and silver typically go up when we see interest rates go up as well. This is something that I initially had a hard time wrapping my brain around. So if you're like me and you've sort of wondered, why do gold and silver actually perform well when interest rates go up, then stick around because we're going to talk about it in this video. So let's do it. Thank you so much for watching my video. I do sincerely appreciate it. If you want to learn more about investing in precious metals, or if you just want to watch awesome videos about gold and silver, make sure to subscribe to my YouTube channel. Alright, so first off, let's take a look at gold and silver prices and how they've been doing over the last few days. Here we are over at sdbullion.com, and real quick, I do want to mention, if you wanted to win the whole monster box of American Silver Eagles that they are giving away, I will put a link down below in the description where you can click on that link and then enter to win. So good luck everyone. But we're looking at the price of silver. It is at $24.71 at the moment. It's moving around. We're up 48 cents on the day, and this is the 1 month chart for silver here. So about a month ago it was in the low $22 range. Now we're all the way up to $24.50 about. So it's gone up over $2 over the last month. You know, it did go up and then at the start of the year we had this little dip, but obviously it bounced back. If we overlay the Dow Jones, the S&P 500, and the US dollar, you can see silver doing a lot better than those. So this is no big surprise to me. Silver is a safe haven asset, and when things are going bad, a lot of people flock to silver. A lot of people flock to gold as well. Let's take a look at the price of gold. So currently it is at 1,848, about 1850. We're up 465 on the day. About a month ago, it was below $1,800, and now it's up to $1,850. So gold doing very well. Now, I believe that the number one thing which will affect gold and silver prices in 2022 is the fact that the Fed will be raising interest rates this year. I'm predicting it will have a huge impact, and I've talked about this before in past videos. We could see gold go up as much as 30% this year, and silver, being more volatile than gold, could go up significantly. But the thing that I wanted to talk about was why. Why would gold prices go up with interest rates going up? I mean, at first glance, this might seem counterintuitive, right? Why is gold going to be moving so much? And to answer this question, I actually brought it up to Lior Gantz in an interview I did with him a week ago, and this was his response.
So there's a lot of forces that impact the price of gold, because the price of gold is a derivative of everything else that's going on. When do you buy gold? You buy gold if something else is prompting you to buy gold. You don't buy gold because you think the ounce is going to grow into 2 ounces, 3 ounces. It's not an appreciation that happens on its own, right? It's not like you buy a company because you think it's going to grow into bigger earnings and more markets, etc. This is an asset class that you buy because other asset classes look bad to you. So one thing that needs to look bad is cash. That's the easiest thing to look at. If cash is burning a hole in your pocket, then investors look at ways of deploying that cash. They go either to stocks, real estate, or bonds, or alternatives. Alternatives being gold. Stocks in 2022 don't seem to be hot. Why? Because raising interest rates is basically playing a weight on valuation. Because if interest rates are rising, then the dividend that the S&P 500 can give you is equal to what you can get in a bond. And not for you and me, but for pension funds, insurance companies, endowments, sovereign wealth funds, to buy a bond is much better than to buy the dividend of the S&P 500. So once interest rates rise, they sell and they play the 60-40 game, the traditional 60-40 split. So that's why in a rising interest rate environment, stocks do less good. And so a lot of people go to bonds. And with inflation being 3.5% for the foreseeable future, obviously cash is a big turnoff. So a lot of people want to leave cash. So you don't want to be in cash. The big money doesn't want to be in stocks. And let's talk about bonds, right? Bonds are a guaranteed loser. If the 10-year bond, which is the barometer for all the other asset classes around the world, is right now yielding 1.8%, which is way more than all the other developed countries, you're already getting a bargain on the 10-year note, right? If you're a Japanese fund manager, an Australian fund manager, a German fund manager, a French fund manager, an Italian fund, you're looking at 1.8% that the United States government is willing to pay me. Here at home, I'm getting 0%. There's a lot of demand in the bond world for 1.8 for Washington. So it's a steal deal in the world of bonds. For us, we wouldn't touch bond at 1.8% coupon because it's a guaranteed loser of money. But if you are mandated as a fund manager to only buy bonds, this is the least ugliest duck. And so I don't think that the 10-year bond can rise much more without there being a lot of buyers there. In that particular case, all of the retail money is not going to bonds. So if institutional money is not going to stocks and retail money is not going to bonds, and retail money is way, way, way out of stocks, nobody wants to touch cash, gold seems really good. Unless interest rates rise faster than inflation, but they aren't. If the Fed is going to raise 3 times, it means that the Fed fund rate is going to 0.75% to 1%. If I told you that inflation is 3%, the Fed's fund rate, even after all of this tightening, is going to be around 1%, and then they're going to start easing again, which means it's going lower. Is gold a bargain or what? Right? It's like getting the worst punch ever from Mike Tyson, and you withstood it. And then another guy comes in. What are you going to think about this guy? You're going to think, I can definitely, if I withstood a punch from Tyson, I can definitely handle this guy. And that's what basically gold is doing right now. If gold can handle a tightening period, because it's only going to be 1%, then definitely gold is a bargain, because after a tightening comes what? Easing. And so the best stress test for gold is happening right now. The Fed has already told you we're going to raise 4 times, and gold is at 1,800. So what does that tell you? It tells you the markets have decided that gold is good where it is. It doesn't need to go down further to justify its price. In fact, once the Fed gives the green light, and I know that they start raising rates, in 1 year from now, this price is going to look silly because they're going to start easing. So I need to buy in advance before the other guys buy, right? That's how you make money. You buy early. So I think people they make a 1, 2, 3 type script in their minds. They're like, okay, raising rates raises interest rates. So raising interest rates makes inflation less. And they make this train of thought that's very simplified, but the markets don't work that way. The markets have made that train of thought a year ago. So the art of this is to know where is the market compared to the consensus. And the market is way ahead of the Fed. And that's why gold here is a steal deal, in my opinion.
I think it's really interesting that Lior mentioned that the price of gold in a year from now can go up so much that the current price would look crazy. But even just a week ago when I did that interview, gold has actually gone up quite a bit since then. And I went out and bought a few more pieces of gold. These are 1/4 ounce American Gold Eagles. And I'm glad I did, because the gold price keeps going up. You know, where is it going to go from here? It's hard to tell week to week, but I think long term, if you're looking at 1 year, 10 years, 50-year time frame, gold has the potential to go much, much higher. And if you look at it in terms of gold compared to the dollar, it's really like, how low can the dollar go, right? I mean, if the dollar goes lower, then clearly everything's going to go up, including gold, including silver. But with people flocking to precious metals for that safe haven, right, it can go up faster than everything else. So that being said, I'm curious what your thoughts are on gold and silver and the Fed raising interest rates this year. Do you think it will have a huge impact? Feel free to leave a comment down below in the comment section. And I do want to say a massive thank you so much for watching my video, and I will see you all in the next one. Silver Dragons out.